All right, let's talk about an app that I bet is on your phone right now. PhonePe. You've heard the name, you've probably used it today. Well, this fintech giant is about to make a huge splash on the stock market, and we're going to break down everything you need to know.
Yep, you heard that right. That simple app you use for everything, paying for your chai, sending some cash to your family, it could actually become a part of your investment portfolio. So this isn't some far-off financial news. This could hit really close to home.
Okay, so first things first, let's get right to the headline news. This is the stuff that has everyone in the finance and tech worlds talking. And there it is. It's official. PhonePe has gotten the green light from SEBI, the Securities and Exchange Board of India. This is it. This is the signal that officially starts their journey to the stock market. So, okay, they've got the approval. But to really get why this is sending shockwaves through the market, we have to talk about the sheer scale of this thing. Because trust me, this is not just another IPO. Just look at that number. 1,33,000 crore rupees. Let that sink in. In US dollars, we're talking about 16.5 billion. That is an absolutely massive, mind-boggling number. So how big is that really? Well, to put it into perspective, this is on track to be the second biggest fintech IPO in Indian history. The only one bigger was Paytm's. That alone tells you what a monumental event this is for the entire market. And who's backing this behemoth? Oh, just some of the biggest names on the planet. You've got Walmart as the majority stakeholder, and then you've got heavy hitters like Tiger Global and even Microsoft in the mix. When you see names like that, you know this is the real deal. It speaks volumes about PhonePe's credibility. All right, so with a company this big, with backers that powerful, you'd think they'd be raising money for a big expansion, right? Well, to really understand what's going on here, we need to look at how this IPO is actually structured. It's a little different. The key thing to know here is a term called offer for sale, or OFS. Now, what does that mean? In simple terms, it means PhonePe itself isn't issuing brand new shares to raise cash. Instead, it's the existing shareholders, Walmart, Tiger Global, who are selling off a piece of their pie to the public. And this is the really crucial part. The money from this IPO isn't going into PhonePe's bank account to build new things or expand. Nope, it's going straight into the pockets of those early investors. They're basically looking to cash in on about 10% of their stake. Big difference. Okay, so you can't just throw around a valuation that massive without having the numbers to back it up, right? So let's dive into the performance metrics. Let's see what's fueling all this hype. First up, market dominance. And wow, is it dominant. PhonePe holds nearly half, about 45% of the entire UPI market in India. We are talking billions and billions of transactions every single month. They are, without a doubt, the king of the hill in digital payments. And that huge market share, it's translating into some seriously strong financials. Just look at the last fiscal year. Revenue was over 7,800 crores. But what's even more impressive is the profitability. Adjusted EBITDA, which is basically a measure of how profitable the core business is, was almost 1,500 crores. And the actual adjusted profit after tax, 630 crores. These aren't just good numbers, these are rock-solid, healthy figures. But this next number is the one that really makes your jaw drop. A 220% jump in adjusted profit after tax. That's not just growth, people. That is an absolute explosion in profitability. It's a huge signal that their business model isn't just working, it's becoming a super efficient money-making machine. So let's recap. SEBI's approval is in the bag. The numbers look incredible. What's the next step on this road to going public? Well, the process is pretty straightforward from here. First, PhonePe filed all their paperwork. It's called a DRHP, confidentially. Now they've gotten that all-important approval from SEBI. So the very last step is to release the full public version of that document for you, me, and everyone else to read. And believe me, everyone is waiting for that document. It's where all the juicy details will be. We're talking deep dive financials, a clear list of all the potential risks, and the final, locked-in structure of the IPO. It's basically the ultimate playbook for anyone thinking about investing. So, this is the bottom line. On one hand, you have explosive performance and a market position that looks just unbeatable. But on the other hand, you have an IPO where the original investors are cashing out, not pumping more money in for growth. And that leaves us with the billion-dollar question, right? Is this a company that's hitting its absolute peak, or is it a giant that's just getting warmed up? That's what we'll all be looking for in that final document.